Welcome back to the Crypto Ski Conversation. This is from Watcher Guru. It says, breaking. United States is officially in a recession following 2 consecutive quarters of negative GDP growth. So this was kind of what the market has been anticipating, kind of waiting on to see what the data came out. There's an article from CNBC that's talking about Yellen says the economy is not in a recession despite GDP slump. The key point says the Treasury Secretary Janet Yellen obviously says we're not in a recession. Quote, when you look at the economy, job creation is continuing, household finances remain strong, consumers are spending, and businesses are growing. So then there's another article here from CNBC on the topic. It says the economy may look like it's in a recession, but we still don't know for sure. The key points of this article says the second quarter GDP decline as 0.9% was a second straight negative quarter and brought the economy in line with a common definition of recession. But we won't know for sure if it is officially becomes a recession until the National Bureau of Economic Research says so. So it's even an NBER does not declare recession in the first half. The economy is far from out of the woods. So there's, obviously, people within, our industry, and people that understand, this macroeconomic stuff and kind of what's going on, talk about, we've been in a recession, and when they finally come out and say that we're really in a recession, we're going to be on the other end of it, like almost in a sense coming out of it type thing. So it's kind of just like a waiting game to, to hear like the final verdict. But I mean, it seems as if, based on, the reports that came out and based on the definition that, we are in a recession. And, from the information that I've got, I believe that we are. Regardless of whether it is or not, the market had responded fairly decent. I mean, look at this. According to CoinGecko, as of now, and it is almost 2:30. We're currently sitting at a 1.15 trillion market cap, currently up 6.1%. If we come down here, Bitcoin is sitting at 24,107. Ethereum sitting at 1,758. Coming out here to XRP, currently sitting under 38 cents, sitting at 37.5 cents here, up 6.4%. If we look at our 24-hour gainer, we have Ethereum Classic sitting up 33.6%, Synthetics Network 27%, and so on. We have a lot of double-digit gainers here for the day. So the market responded, very well. If we come over here, let's see what the we come to the main page here. And we see we have green, the S&P 500, the Nasdaq's green. So, man, I guess we're just gonna kind of wait and see. I guess tomorrow, see how things play out through the weekend and see what Monday looks like. But coming over here to the Bitcoin Fear Greed Index, we're currently sitting at a 32. So just yesterday we ticked in at a 28. Now we're sitting at a 32. So we're up 4 points, which is positive. We gotta have an update here in 2.5 hours. But, seeing us outside of the extreme fear range, still holding strong in this fear range is optimism. That's positivity. So just kind of like a wait and see to see when things really reverse out for our market. So I got some stuff that I want to cover in regards of, the SEC's involvement within this crypto space and their tactics of enforcement by, regulating by enforcement, and how they're kind of, have a bigger footprint and, a stronghold on the entire industry so they can control it, and they're utilizing through unlawful tactics. So there's a bunch of different tweet threads and videos that I'm going to cover that's kind of talk about some of that stuff. So from Watcher Guru, it says just an SEC chair Gary Gensler says the agency is working with crypto exchanges to regulate them like securities exchanges. And for all of us that's, that knows what's been going on, that's been following this channel, following, the XRP community channels and their Twitter pages, and know what's going on, like we know that the SEC and Gary Gensler aren't working with anybody. That's not what they're doing. If anything, they're working with their incumbents and the people that they're trying to protect their own pockets and agendas. Johnny Deaton's responding, he says, he's not working with exchanges. He's telling them to agree with him that the tokens are securities so he can then claim jurisdiction over the asset class through surrender. We need to unify and only accept his resignation. Absolutely. And literally when he says this, I literally think about when he recommended that Brian Armstrong from Coinbase, stood up and fought the good fight, to resist against, the SEC and Chairman Gensler's overpowering tactics when Coinbase tried to, develop their Lend product and they got quickly shut down by Gary Gensler and SEC. Johnny Deaton, recommended that, he stood up and fight for, his rights and fight for, some sort of clarity so he knew how to move forward in regards of his platform and his Lend product. But it's like, that's what he's saying. It's like, if even with Coinbase going being under the microscope now, are they going to roll over, surrender, or are they going to stand up and fight the good fight? And that's kind of with this community, when I say community, I mean, the XRP community and the supporters within the community. Obviously, Ripple and the SEC are going at it right now. You have Library and the SEC. So you have this community of people that have seen the writing on the wall over the past year plus, and that truly has stood up to fight for what's right, fight for their portfolios, fight for their right to invest, and fight for the clarity within the entire space. Moving on here, Representative Bill Huey, it's Huey, we'll say Zenga, okay? Representative Bill says Gary Gensler, no exchange wants to, quote, come in and register without knowing what's the market regulations are. The SEC Gov should stop using regulation by enforcement to provide clarity in the marketplace. I mean, literally, we've been screaming that and shouting that from the rooftops for over a year plus, and we're getting closer to it. Obviously, clearly, Gary Gensler and the SEC still have some sort of agenda, and they have their tactics and their ways of doing things, and it's all they're doing is literally hindering innovation and growth within the space, which is affecting all investors, and it's affecting the entire market. I can't believe I had a tongue twister on his name like that. I had it earlier. Digital Asset Investor had put this up. It says, the real crypto mom has arrived. Hester Pierce could have blown the whistle on the SEC long ago and chose to play good cop with words only instead. So let's take a listen into this.
Yes, people need to know what the rules are so they can follow them. I don't believe in any kind of gotcha regulation where the rules are constantly changing on people and they don't know what they're supposed to be doing. I believe that responsible actors do want to comply with the laws. That's how they can grow their business in a compliant way. But it's incumbent upon regulators to make sure that we're providing that regulatory clarity. And we have a lot of tools to do that don't involve bringing enforcement cases where, the broad implications of this could result in, first of all, looking at the securities laws and applying the Howey test to particular types of tokens. That's something. And then there's, of course, what others have commented on, which is a chilling effect that it's having on the industry because of the fact that it's disruptive to file a complaint like this, but not have a runway or a path to the regulation.
So yeah, that's Caroline DeFam, CFTC commissioner here says, quote, I don't believe in any kind of gotcha regulation. People need to know what the rules are so they can follow them. I mean, straight up, could you imagine like growing up and, not being told, how to act or how to behave or what rules to follow on the playground, right? And then you go out and you do something and you get scrutinized for it and you get placed in punishment, or worse. But you don't know how to abide by the rules. Can you imagine? I mean, could you imagine not being told the rules in sports, for instance? You know what I'm saying? And then you're going out doing things and you get, the whistles are constantly being blown on you or you're getting ejected from a game. It's like you don't even know how to play. You don't even know what the rules are. What are the boundaries and guidelines behind this thing? And the same applies for this market. It's crazy. These entrepreneurs and these innovative, brilliant-minded, blockchain companies and just smart people within the industry that, that want to, be a part of this space and create, these awesome products, whether it's, a DeFi product, a metaverse product, or NFTs, or whatever the case is, not knowing the rules of the road, how are they supposed to navigate it? Crazy. This is from Crypto Law. Senator Pat Toomey. It's a little 5-minute video that is super intriguing, and it talks about the topic of, Chairman Gensler and the SEC. It says this from Crypto Law. It's from Johnny Deaton, Crypto Law US. Senate hearing today. Senator Pat Toomey tears into Gary Gensler for the SEC's absence at yet another policy hearing on the very thing he's supposed to be doing, fighting scams, fraud, and high-risk schemes that explode on holders. Quote, where was the SEC, he asks. Continues down here, says, of course, we know where the SEC has been, exceeding its authority, making up rules on the fly, pressing huge non-fraud attacks on Ripple and Library, and smearing the retail holders they claim to be protecting. Is Gary Gensler working for you or working for himself? So let's take a listen into this. It's super intriguing.
Thank you, Mr. Chairman, and welcome to our witnesses. Our hearing today looks at scams and risks in the securities markets with a specific focus on crypto. And given the recent collapse of an algorithmic stablecoin and the bankruptcy of several crypto lending platforms, this is a well-timed hearing. And of course, one would think that we'd hear from the SEC, the primary federal regulator of securities, especially considering that the chairman there considers nearly every cryptocurrency to be a security. That's the request Republicans made. Now, there must be some good reason why Chairman Gensler or one of his subordinates can't appear before the Senate Banking Committee to explain what the SEC was doing while several crypto lending platforms, including Celsius and Voyager, imploded, especially since the chairman himself would very likely claim that these companies fall entirely into his jurisdiction. Our Democratic colleague said he's not testifying today because it's possible that he may appear at the committee this fall. Well, that's little comfort to the thousands of Americans who lent their crypto to Celsius and Voyager, some of whom will be unsecured creditors now in those companies' bankruptcy proceedings. What was the SEC doing? While these companies and others were offering lending products that looked an awful lot like securities. And what's the SEC doing now to help ensure the crypto community gets the regulatory clarity it has repeatedly asked for? People, we all deserve answers now. We deserved them a long time ago. And Chairman Gensler has the answers to those and other questions. He just refuses to share them with us. Now, it's clear that some Americans invested in unsustainable schemes and even fraud, and we need to investigate that fraud and prosecute any violations of the law. But since at least September of last year, I've argued that some digital asset projects were offering returns that didn't make any sense to me, and that some of these endeavors would inevitably end badly. Well, over the past couple of months, those risks became reality. As I mentioned, Celsius and Voyager were offering interest rates as high as 18% if customers would lend their digital assets to these companies. Well, the firms would then lend that crypto to other larger investors to make short-term bets on crypto markets. Well, once the crypto sell-off began, the borrowers couldn't pay their debts, the platforms froze customer accounts, and now both companies are in bankruptcy and investors are staring at billions in losses. These circumstances beg the question, where was the SEC? Had the SEC responded to calls for clarity on how it would apply existing security laws to novel digital assets and services, something that I and many others repeatedly asked for, things might have been different. For instance, the SEC could have said how it intended to apply the Howey and Reeves tests, which the SEC uses as a primary mechanism for determining when something is a security. The Howey test has 4 basic prongs in determining whether something is a security. To be a security, there must be an investment of money in a common enterprise with a reasonable expectation of profits that are derived from the efforts of others. Well, it seems like the crypto lending products that I've mentioned had all 4 of these features. The SEC almost certainly believed that too, because in February they went after BlockFi for offering a similar lending product. Here's the problem with the SEC refusing to publish regulatory clarity about when digital assets or services are securities. In the absence of that clarity, you're left with this ad hoc approach to consumer protection known as regulation by enforcement. Now, there are at least 4 problems with this capricious and unevenly applied strategy that the SEC is pursuing. 1, it's a serious challenge for any well-meaning innovator striving to comply with existing laws and regulations if he doesn't know how they'll be applied. Number 2, it stifles innovation. Market participants who lack the benefit of understanding the SEC's thinking prior to designing a product, they may never create something that could be very useful to consumers out of a fear of how the SEC will interpret it. Number 3, creates a legal gray area that allows entities with a higher tolerance for legal risk to offer products that might be very bad for consumers. And number 4, it's ineffective. Just ask those who lost money on these crypto lending projects. Let me give another example. When the SEC announced insider trading charges involving a former Coinbase employee last week, it claimed that the offenders had illegally traded 9 digital assets that were securities. Now, the SEC, finally, in their complaint, they lay out the reasons why they believe these digital assets are securities. I'm very skeptical of their arguments. Yet they've still failed to disclose the rationale publicly before launching the investigation. That kind of approach is patently unfair to investors and developers alike. So Republicans have been arguing for a more thoughtful approach to regulating digital assets. The first place where we should be able to find common ground, and I actually think we're in many cases are close, is to chart a path forward for clear, sensible regulation on stablecoins. There's a clear bipartisan agreement that stablecoins should have consumer protections. There are virtually none now. I've proposed a framework to do that. I'm in discussion with several members to make this proposal a bipartisan one. Let me conclude with this. It's absolutely essential to investigate any fraud in the crypto market and any violations of existing law and prosecute those who are committing those crimes. So while I appreciate today's hearing topic, it's a missed opportunity without having the SEC here. Moving forward, I hope my colleagues will take a balanced look at these technologies, studying both the consumer risks that we need to deal with, that we'll, I think, hear about today, but also the enormous potential for consumer benefits that distributed ledger technology could bring. Thank you, Mr.
Straight up and down. Literally put everything we've been talking about, well, most of the stuff in regards of just the dialogue that we've been having in the discussions we've been having in regards of Chairman Gensler's and his tactics and behaviors and the SEC's lack thereof protection of investors. Literally just hit it on the head. That's huge. Wanted to end on this from Library. This is from Library. It says, our opening offer for a settlement is the complete abolish to completely abolish of the SEC and the 10 years in jail for Gary Gensler. Man, I mean, even Weezy X puts that Life, and I think that's from the movie Life with Martin Lawrence and Eddie Murphy. Crazy, man. This is absolutely crazy that, you know, the SEC is operating the way that they're operating. It is crazy, man. But with all that being said, I mean, that's kind of the update I have here, and I really just wanted to touch on Gary Gensler, SEC, and you know, their involvement within the space and how they're, you know, hindering and affecting our markets and our space and the growth and innovation within the space, and it's unacceptable. But make sure you come to the Crypto is Key Conversation YouTube channel and subscribe. Follow us on Twitter at CryptoIsKey1. Really excited to keep bringing you content and to grow this community. Thank you for all the support. With all that being said, stay strong out there. Be safe.